One of my favorite sayings in real estate is it's never a good time to buy real estate, but it's always a good time to buy real estate. Take a look at this video from 1981.
Lower than last week. Chartered banks are unlikely, as a result, to lower their prime rates. There'll be no relief from 15 and 16% mortgages either.
I think if you have to buy a house, if in the area of looking for a house, and that's what the mortgage rates are, what are you going to do?
On a $50,000 mortgage at 10%, the payment would be $447 a month. But at 15%, and that's a good rate today, the payment is $623 a month.
They just decide that they have to buy a house and they don't pay any attention to the rate. Or they buy a less expensive house.
You think people have come to accept mortgages at 15%?
Yes. I don't think people think that we'll ever see 12, 11 again. Maybe even not 13. They seem to think 15 is good.
Lower than last week. Chartered banks
crazy?
are unlikely, as a result, to lower their prime rates.
Of Miami's
There'll be no
interest,
relief
Miami's
from 15 and
prices
16%
and
mortgages
interest rates
either.
in the United States. So this chart shows you from the time Miami was settled, which was after the Seminole Wars in the mid-1800s, to now. So back then, there really were no rates. They would just give you free land if you were willing to live in the wilderness. And then it goes by decades. So 1900, the interest rates were not comparable to what we do now. So that doesn't count either. But then from 1950, 60, 70, 80, 90, 2000, you can see the history of the interest rates. And you can see the sales prices adjusted for inflation. So what cost $81,000 adjusted for inflation in 1950 today costs $530,000. So imagine these people in the 80s when this type of house was worth $160,000 thinking these prices are so high, these rates are so high, it's a mistake to buy a house because it's too expensive. If they had bought that house in 1980, in the year 2000, only 20 years later, they could have sold it for more. But today, they could have sold it for, my goodness, 4 times as much as they paid for it. So this is why they say it is always a good time to buy real estate, because even if in the next 10 years, prices don't skyrocket, if you keep that property for the long term, it will become good for retirement. It'll become good for your children, for your grandchildren, if you keep it that long. So now let's do a comparison of the impact of rates. So if you were to pay $650,000 on a purchase price, what impacts that the most is not only the interest rate, but the down payment. And not even so much because of the down payment itself, but because of something called PMI, private mortgage insurance. So when you put less than 20% down on a property, your private mortgage insurance on a mortgage of this price level tends to be about $600 a month, $600 to $700. That is very high to pay for insurance, which is only there in case you default on the mortgage. So definitely recommend putting 20% down at least so that you save those $600 and then you save the amount of money that your mortgage payment goes down based on your higher down payment. So if you were to have an interest rate of 7.9, say today's rates, but you only put 5% down, you would have a payment of $6,500. But let's say you save up 20% down, and let's say you temporarily buy down your rate, and you're able to get down to, 5.8 is probably where it's going to be at the end of next year. But let's say you're able to buy it down that much. Your payment could be $4,500, $2,000 less than if you were to do 5% down. So of course, these numbers can vary. You'd have to get together with a mortgage professional to really figure out how much a temporary buy down of a rate will cost and just refinance in a year or 2 years whenever the interest rates hit a new low. So that is my best advice. I do think that in a couple of years or less, maybe in as little as 6 months, there are going to be a lot more people competing for the properties in Miami because they will be able to afford them as interest rates come down. Right now, there is competition, and the reason there's competition in our desirable areas is because there isn't that much on the market for sale in the areas that people want to live in. So if you're looking in the Grove, the Gables, South Miami, for example, there are few houses on the market. And although a lot of buyers are not buying right now and they're waiting, The buyers who are looking right now are all looking at these few homes on the market. So we are seeing multiple offers. We are seeing homes selling quickly. And it doesn't seem like people are holding back, but they are. So when the interest rates come down and all the people who've been waiting come into the market, the homes in these desirable areas, they are going to be even more competitive. So my best advice, unless you're wanting to buy in Homestead or West Kendall, which are different markets, my best advice is buy now, buy down the interest rate using discount points with the lender, and when the mortgage rates come down the next year, refinance. I hope this helps. Have a wonderful day.